Hi, good morning, everyone. Our guest today is AJ Rounds, founder and managing partner of Airline Capital, former venture capitalist, professional turned real estate fund sponsor and operator. He emphasized disciplined growth, community impact, and investor outcomes. So, AJ, people who don't know you, could you share a little bit more about your role and how it fits into the bigger picture at your company?
Sure. Yeah. So I started my career out in door-to-door sales, selling pest control of all things across the nation here in the United States, and started in, let's see, where did I start? Cincinnati, Ohio, and then Atlanta, Kansas City, Oregon, Washington, all over the entire map, and learned how to sell and how to meet customers' needs, and specifically how to make sure that we're being ethical and honest in everything we do with all the transactions, which is important, especially when you get into the investment world, because you want to make sure that you're kosher and following all regulations and guidelines. So did that, was pretty successful at that for a while, and then that eventually took me to started a company down in Las Vegas, an LED lighting company back in 2010, which was when the lighting craze was really happening, and that was really big. So I thought, hey, casinos, that's the city of light, so might as well sell and promote and distribute lighting products there. So we did that for a while. Pretty quickly, we found out we had an epic fail, which, every entrepreneur's journey includes a failure or two or three, right? We didn't realize that you had to, the distribution model down in that location and really anywhere around the country with electrical products is to go through the electrical wholesaler. And then they simply retail it. And we went directly to the retail channels, directly to the casinos themselves. So we had multiple orders that we fulfilled, and we had multiple products being beta tested. And then once the wholesalers found out what we were doing, they cut that channel off immediately, and within a week, all of our orders dried up. So we essentially sold that at cost, and then I moved into the Provo, Utah County area, which is near Salt Lake City, Utah. And there we built, myself and a couple friends from college, we built a company where we serviced, it was corporate housing essentially. And so we basically built corporate housing on site for oil and gas companies in Nevada and Texas, in Williston, North Dakota, in Montana, even down in Louisiana. And we basically built housing, large facilities, think of style housing. And then, of course, the kitchens and the gyms and the golf simulators and the swimming pools and all the fun stuff to support that. Essentially, we were running remote hotels. And we did that for, 5 or 6 years. Turned that company from, about a $2 million valuation to about 40 million at its peak. Went from 2 employees to about 160 employees in 5 states. So that was where I learned a lot of how to build and scale companies and grow teams and, build out the product line to where you could promote it to large Fortune 100 companies. And then I took those skills, exited out of that venture, and with a few other co-founders that happened to be in my neighborhood, we started Rev Road, which is a venture capital firm you mentioned earlier. And we raised about $93 million. We've deployed most of that to date in about 94 different startup companies. You know, I'm talking like, pre-seed, seed, Series A type companies, mostly post-revenue. And, they're all in various stages of growth at this point. A lot of tech, some service-based companies and some product-based companies. And to date, we've now got a small team working and running the day-to-day there so that they can work on M&A activities and getting a lot of those assets sold. We're in a return of capital phase with Rev Road to our investors. And then I started Arlen Capital. We funded our projects. We didn't fund all the projects in Arizona. It's just an interesting market there. But in the Midwest, we funded most of our projects, and we're now building from scratch affordable housing, about 1,000 homes in Iowa, Kentucky, Missouri, and those three, Iowa, Kentucky, and Missouri, essentially. And that's going well. We've got developers on the ground. We've got of course, the investors are super thrilled with what we're doing there, and then the municipalities are all on board. So what I'm doing now is, now that that's raised, now I'm building. I got the itch again to build companies, and so now I'm building my property management companies. I have two of them. one here in Utah Valley, which is, in Provo near Salt Lake City, and then one down in southern Utah near Las Vegas, which is a little town called St. George. And that's what I do. That's where I'm at, and super thrilled to go from corporate America back down to Main Street America. And who knows, we'll probably go back to corporate America at some point soon.
I would say, wow, what a great journey, great progress, great lessons learned, and
Mhm.
every lesson I think you emphasize in the next company that you're building. So yeah, that's great. Great success. So what does your typical day look like now?
Great question. Excuse me, I have a little bit of a cold. Right now, what I do is I come in each day, we check in with the team where we're at, what new contracts we have in the queue, what leases still need to be executed, and then we just make sure to monitor how our tenants are doing. We're focused on marketing. How do we get the name of Key Renter, which is the name of the company, out in the market more? We're going to start a new podcast series for Key Renter. I actually do host another podcast called the Midnight Founders Podcast. And that one's been going for about 3.5 years. We get about 5 to 6,000 downloads a week. And it's entrepreneur focused. So it's focused on starting up new startups, helping to grow and build their companies. And some of the challenges they see along the way and how they overcome those challenges. I'm really a fan of the underdog. How do we help the underdog entrepreneur be successful? So now I'm going to take what I've learned there and we're going to make a mini podcast series here at Key Renter focused on property management, how to rent out your properties at the highest valuation, and how to reduce your costs as much as possible on your properties. Because I look at property management, it's interesting, this market, or this industry rather, there's a really low bar of quality of service. So what I mean by that is, I can make 10 calls to 10 other property managers that I compete with, and I may get one return phone call, maybe two, but mostly one. And it's usually 2 or 3 days later. So the level of service is very, very low. So my goal is I track with my team how many calls we get, how quick we are to respond. And that's typically within, 22 to 24 minutes. And so we are very focused on making sure that we're getting back to our people ASAP, and that's what's differentiating us from all the other property managers out there. So I want to focus on that with the mini podcast series and talk about those things and how do we look at this from an investor perspective where it's not just we're collecting rent, we're actually helping you optimize as an investor your investment property and making sure you make the most money you can possibly make. So we're going about it from a different perspective and hoping to grow and scale. And that's what my day-to-day looks like.
So what are the major shifts that you're seeing in the industry right now?
As far as affordable housing,
Yes, that or even property management, covering, as real estate in
um,
general too.
yeah, no, that's fine. I'll address both. So with affordable housing, what I think we're seeing is more and more of the large corporations are getting involved in the affordable housing sector because they want to purchase large tracts of multifamily units and of large, neighborhoods. So they can, my theory is they're doing that so that they can, number one, it's a great sector because there's always people that need affordable housing, right? Those are newlyweds, those that are going through life changes like divorce or bereavement issues, those that just want to downsize, right? So there's sector is always hot, right? So these large corporations like Blackstone and BlackRock and some of these other ones, Goldman Sachs, they want to get into that sector because it's a really dynamic sector. The concern I have is that, as they purchase and build their portfolios, they'll be able to control prices more and more, which is the opposite of affordable. I think it'll become less affordable, right? So, and I don't want to get political here, but I know that Trump just earlier this week said President Trump wanted to reduce the number of large corporations that are getting involved in affordable housing. And again, I'm not sure all the dynamics. I just read a brief article about it, but I think that's hot on everyone's mind is how do we continue building and bringing more affordable housing to the market? It's a huge question, and I don't think anyone really has a great answer yet. As far as property management goes, I see that property management will become more and more of a need all the time. And the reason is because with AI coming in and disrupting so many tech companies and so many other companies, the way they do customer service, the way they do sales, the way they do, you know, um, even financials and things, right? AI is disrupting everything, right? And we all know this. We're watching this, we're seeing it in our own companies, but we're also watching it in the news and the headlines. With property management, that is one element that is so people focused. I just don't see. I mean, there are pieces of it that we are automating even ourselves internally, but I don't see that managing properties and optimizing them from the best perspective possible. That's never going to be an AI function anytime soon. That is very people focused, and we'll always have to have boots on the ground to make sure the properties are looking the way they're supposed to look. So what I'm excited about is to dig in further and to go bullish on property management because I think it's going to become even more necessary, especially as investors. That number of investors are growing because a lot of people listen to Bigger Pockets podcasts and a lot of people want to get into the real estate game. They're going to do so on maybe a small to medium or large scale, but regardless, they're going to have a great property manager to help them along the way. And so that's a huge component of making sure you're successful as a real estate investor. So I think it only will grow, not shrink.
Yeah, that's very interesting. I know people think AI is going to replace, but I think AI is not going to replace the human factor. It can make the processes better, but the human factor would be there always, especially in real estate as well. Looking at the trend, how has that shifted your business or your growth strategy?
How has interest rates shifted our growth?
Overall, like the trend that you're seeing, like property management, you touched a little bit, like, you call other property man and you're like, hey, the service is not great. And also, like, how has that shifted your growth or your business strategy?
Yeah, good question. So what we're seeing, and it's very market specific, right? So what we're going to do here in Provo, Salt Lake County area in Utah is going to be different than what they're doing in Chattanooga, Tennessee, and Richmond, Virginia, and and Omaha, Nebraska. It's going to be different per market, right? What we're seeing in this market specifically is as prices are going down a little bit, there's becoming this correction in the market because housing is super expensive in Utah. We're one of the top. We're trailing California in home prices. It's ridiculous just because we have a really strong tech sector here now, and a lot of folks are relocating from the coast to the Utah, Idaho, Arizona areas. So we're seeing a huge influx. So housing is really high. So now that we're seeing interest rates go down a little bit, and we're seeing more housing built, so there's more supply to meet that demand. We are seeing a correction in housing to where it's properties are not quite penciling, they're not quite cash flowing yet, but they're getting closer. So that's more enticing to investors. So what that means for us is property management will, services will grow, and we're just reaching out to more and more investors and business owners because what I'm seeing is a lot of business owners now want to diversify. This is why there's a great overlap with what I did with venture capital and property management is because I understand the mindset of a founder and of a business owner, which I understand that they typically don't want to have all their eggs in one basket. They don't want to keep all their resources in their one company. They want to diversify. So what do? They typically will purchase properties that they can utilize as rentals and or investment properties, and then they'll need a property manager because they're too busy to run them. So it's a great fit because then I can talk to and approach that network of founders, entrepreneurs that I know well and help them with their properties and manage their properties in the right way. So we are seeing more growth happening in the property management sector because thankfully for the falling home prices, falling investment prices, and falling interest rates. Hasn't happened. I mean, it's not a drastic fall, but a little bit of move there has been helpful.
Yeah, it's like moving the needle a little, so it's helping in eventually. So that's a good
Mhm.
point. So looking into your current state of the business, what would you say is working well? And then if you look at the other side, is like what's been frustrating?
What's working well in my business and what's not? Is that kind of the question?
Correct. Yes, yeah.
Let's see. That's a great question. What's working well is we've got a fantastic team. We've recently employed the Entrepreneur Operating System, or EOS, as it's known in the industry, where you have certain meetings, like for example, it's a structured framework where we now have a staff meeting every week. It's called the L10, which is where we discuss updates, but not just updates, issues that we need to resolve as a team. We talk about our KPIs. We put down some really fixated and important KPIs that help us monitor, are we winning? Are we not winning? So we're really managing the business on a much better level than we have in the past. So I'm really excited about that. What's still not working is we still need to, we're not known as the cheapest, which I don't want to be known as the cheapest. We're not the bargain basement, property manager, but we do need to, but we are competitive. And I think we need to optimize our profitability in just monitoring our fees a little bit. Some of the things we do take a lot more time and effort than other things, and we need to appropriately right size the pricing for those services that take more time than others. And we haven't quite done that. So we're not optimizing for profitability as well as we should. The other thing that's not working as well as I'd like is we're still trying to figure out what the best lead gen system is for us. Property management isn't one of those things where you just you you buy a list or something and just start calling down the list. It's actually pretty difficult to find out who owns what properties. And so we are working with a couple of platforms that are better at doing that than others. So we're still trying to dial in the overall like our lead gen strategy. How do we bring in consistent leads overall that are qualified that we can count on so we can hit our numbers on a monthly basis? And that's something I'm still trying to dial in myself. So from a marketing perspective, where I've been a CMO multiple times, that's been kind of a fun challenge, and I'm still trying to get on top of that.
Yeah, I think you got about a good point. And now you mentioned about KPI. So if you pick one KPI, which one would you say you're most focused on improving?
Great question. So we're really focused on our revenue per unit, meaning how much revenue do we bring in per unit that we manage? And it's not just charging fees to charge fees. That is not the appropriate thing. What it is how much are we charging for the value we bring? So if we're bringing more value, we should be charging more for the things we're doing. So we're really focused on that one heavily. We're also focused on doors under management. So how many doors are we managing specifically?
Yeah, and that's a good. I think it's increasing property management, right? I think once you have more leads into that. So I'm like looking at, I know you mentioned more doors. If you look into, 6 to 12 months from now, where do you want to be in that time from, like six to 12 months from now?
Great question. I want to be to a point where the company is, I mean, it's not functioning. I mean, the goal of any owner is to have the company function with or without him or her, right? Meaning, like it's better if you can really get things rolling and get things moving as a company, and then you're able to step away and let your team manage most of the processes. And that's not intuitive to a lot of founders. A lot of founders want to be part of it. They want to be the integral piece of it. They want to be central to all the operations of the company. Me, I'm the opposite because a company is most valuable when you have leaders in place that can essentially replace you as the owner. So my goal is to be able to replace me as the owner and then hit our goals as far as growth for revenue per unit, which we just discussed, and hit the certain door count that we want to hit, which we're essentially going to double in size this year is what is the hope. So that's what we're working on.
Yeah, that's very good. I think that's the thing, like working in the business or working on the business. I think you want to work on the business, but not in the business. If
Correct.
you,
Yeah.
yes, and if you could solve one major challenge today, what it would be?
I would love to solve world hunger lead generation process that is scalable and replicable that we can do over and over and over again. That's what I would love to solve.
Yeah, that's good. I know you touched a little bit on the property management companies. Every company is not great. You think, and from a tenant side, sometimes they are like, "Hey, I don't know if they're gonna manage my property to the best I would have managed." Do you think that's like more like an industry-wide issue, or is like specific companies are leading to that reputation of a property management?
I think it's industry wide. It's pretty universal that property management is terrible just from a customer service perspective. And I would love to be able to change that, just because I think that I mean, here's what property managers don't realize is that when you're managing a property for whether it's a single property or whether it's, 50 properties for an investor, that's one of their biggest investments. So you have to be on it. You have to be engaged. You have to be focused. You have to be knowledgeable on what is the next best thing for that property and optimizing. I mean, what I tell my landlord and my owners is, hey, even if you miss 1 month of rent, it's going to take many, many months thereafter to recoup that 1 month of rent that's lost. So the goal is to have zero gaps in your rental history. And that takes a lot of coordination and planning and making sure that you're marketing that property before it ever becomes vacant. And a lot of property managers don't operate that way. They start all their work and all their efforts once the tenant moves out. Well, then you miss a month or two of rent, and that to me is unacceptable.
And thank you, AJ. That was a great conversation, and thank you for sharing your story of growth. And I wish you
Sure.
continued success.
Thank you.
Thank you for taking the time.